Hello, everybody. Ignatius Jackson, CPA here with another video for you. Today, we are talking about common business deductions and some things that, maybe the gig worker can kind of think about as well for their business. I got asked a question specifically about the gig economy and some common business deductions and things that they can do to save themselves some money. So we're going to talk through all of that. Okay. So stay tuned, stick around. We'll be right back in a second. All right. Alrighty, and we're back. So thanks everybody for tuning in and listening in today. A lot of good information is going to be on this video. So we got some common business deductions that you can kind of think about and consider for your business. This works for any business. It doesn't have to be a gig economy business, but specifically, I'll talk about a couple items for the gig economy that will be beneficial to you guys. The Ubers and Uber Eats and DoorDash and Lyft drivers and all that kind of stuff that's out there, as well as, if you have an online e-commerce and things like that. So we'll go ahead and talk through some of those that you can kind of consider and think about for your business that will help to save you money on your taxes. Okay.
Are you serious?
So first one that is a very, very common thing for gig economy workers, because you guys use your car or you lease a car sometimes from the whatever company you're using, would be to do mileage for your vehicle. Now, the key is that I've come to find after doing, several of these returns for Uber drivers and DoorDash, et cetera, is the mileage that they give you through the app is only while you're driving on a ride or, while you're on a trip. So what you want to do is actually have a secondary app on your phone called MileIQ that will help to track all your miles. MileIQ is just one example, by the way. I'm not necessarily saying you should use them. I don't get compensated or anything like that. It's just the one that I use for my business. So, but definitely recommend MileIQ. However, there's plenty of other mileage apps out there, including if you have a QuickBooks subscription, you can even use QuickBooks Online to track the miles. So just my recommendation is just have some kind of app where you can track all your miles and make sure that you're getting the full benefit of driving your car around. Okay. Now, when you track your miles, there's two options for doing your auto deduction. You can do actual or you can do mileage. Mileage is the easiest and most common one that's probably done. Actual requires you to track a lot of information. You have to track all your gas receipts. You got to track all your repair receipts. You have to track your lease payments or your auto finance payments through your lender. So it's a lot more complicated to track all that for actual, but it can benefit you if you use your vehicle more than 50% for business purposes usually. Okay, especially the higher it goes, like 80% business use, it does tend to give you a slightly better deduction, especially if your car is a little more pricey or expensive. Okay, that's usually where you want to consider doing actual. If you have like a old car that you're kind of using that you paid off already, you don't have a loan or anything, then usually mileage is probably going to give you a better bang for your buck there. Okay. So some things to think about for those two. All right. The other one that's commonly missed is home office. Do not be afraid to take the home office deduction. Make sure you set yourself up a home office. It doesn't have to be a separate room. It just has to be a separate space inside of your home that you only use for business. Okay. Primarily used for business. All right. That's the objective of the home office. If you can justify that, then we can take the square footage of that space divided by the total square footage of your house and get you a deduction on your mortgage interest if you own it, or your rent if you're renting, as well as any utilities, your internet, et cetera, et cetera. Okay. Repairs and maintenance like pest control, maids that might come in and clean. We can do all that kind of stuff. If we could take a portion of that, as long as you have a separate space to use primarily or only for business. Okay, so something to really think about. Excuse me. The other really nice benefit about having a home office is we just talked about mileage. If you have a home office and it's your primary location, or it's an administrative office where you primarily respond to emails, do bills, things like that, you can actually write off all your miles, even if you have a second office location. Okay, so even more important, from the second you leave your door, when you start driving for Uber or Lyft or whatever, or any other business type activity as well, bam, you got mileage that's being counted. You got deductions that are being incurred. Okay. Even if you go to like an office supply store for your business, that counts as well. So track that as well for the mileage. So home office is really, really key and essential. Okay. Meals, a very common deduction. For the next 2 years, 2021 and 2022, it's 100% deductible. Normally it's only 50% deductible, but super powerful strategy to do some meals. Okay. One way you can get it done, if you don't have clients that you meet with, that you, or whatnot, maybe there's other Uber drivers or Lyft drivers. Maybe there's a little community you can kind of create where you go and you meet with them periodically and meet over food or meet over drinks. Now you have a meal that is deductible in your business. Okay, you have to eat anyways. Why not get a deduction? And we as Americans eat out all the time. So why not make it a business deduction by making it a business meal? Okay. Another way you can do it, have a board meeting at dinner. Have a discussion with a group of your friends or with your family or with your parents, etc., close friends, etc. I mean, you can have a board meeting, periodically. I don't recommend usually more than once a quarter, but you can definitely have a board meeting periodically where you have it over dinner. Or, bam, another strategy that we're going to talk about here next: travel. Go to Vegas, go to Miami. Take a little trip for a weekend. Get yourself a nice little trip. Business owners don't take vacations, right? They take business trips. So get yourself a nice little trip to a location, have some fun, meet for 4 or 5 hours, 6 hours for a day talking about the business, and then the rest of the time, do whatever you want to do. Okay. Usually, so the way that works, you get a kind of a travel day there. You can then spend the day, the next day doing your business meeting, okay, for the board, etc., thinking about your business, strategizing, etc. And then the next day you get a travel day back. So you can basically get a 3-day weekend out of it by, flying out, early Friday morning, do whatever you want that whole day for Friday. And then Saturday you do your meeting, and then the rest of the day you do whatever you want. And then Sunday you do whatever you want for the day, maybe fly out Sunday night back home. So it's a nice way to kind of get a little 3-day weekend. And you can also do it if the 3-day weekend's on a Monday, etc. So there's just different ways you can kind of structure it, but just some thoughts and things to think about and consider to help you with your business. But if you're traveling for business, guess what? Now you get to write off your airfare, your hotel, your rental car, still your meals as well, except now you don't have to have people with you. You just get to write off meals even if you're eating by yourself. Tips, don't forget about tips. If you leave tips for the house cleaner in the hotel or the valet person, etc., make sure you take a deduction for those tips. Those count if you're traveling. So those are all really good options and things to think about to take some additional deductions. Entertainment, unfortunately, is not deductible. So I just want to remind everybody, entertainment is not currently deductible as a business expense at all, not even at 50%. Okay, so keep that in mind. Health insurance is another common one that is missed. If you have health insurance that you pay for yourself and you're not getting it through a W-2 job and you have no offer from a W-2 job to get the health insurance, then bam, you can take a deduction for business owner health insurance and it'll decrease your taxable income. Okay, so something else to think about. Insurance for your car, liability insurance, workers' compensation insurance. If you have any of those things, those are all deductible items. If you need to do advertising, it's deductible. Okay. So those are some common things I want you to kind of think about and consider as a gig economy worker and as a just general business. Anyone who in business should be taking most of these deductions and enjoying, some benefits from having a business. being a business owner is a great tax strategy. Okay. Plus, it's also a really fun time depending on the business that you're in. This last year for me has been a little tough with everything that's going on, but I still enjoy what I do. I still love talking to people. I still like helping people save money. And so, being a business owner is really exciting. It's a great opportunity. And it really does build character. So if you don't currently have a business, hey, become an Uber driver, become a Lyft driver. Bam, you're in business for yourself. And then you can start doing some of these things. The one word of caution that I will give you is don't try to take a bunch of expensive deductions when you're not making a bunch of money. Okay. So don't have $1,000 of income or revenue come in and then you take $20,000 of deductions. That will almost certainly get you audited every year. Okay. So please be reasonable, what you're doing. If you're legitimately spending that on the business and it's something that you're doing to kind of get the business up and running and going, okay, if you get audited, we'll show the documentation, we'll fight the IRS and we'll get it done. But if you're doing stuff, like some of the things that we were just talking about, those are totally legitimate things, but it needs to make sense for the business, right? You would never, as a business owner, take a trip somewhere for a board meeting if you have no money, if you've been making no money, right? It just doesn't make sense logically. So those are just some things to kind of think about and consider. All right. Well, thanks for tuning in. I know I've been out or away for a little bit, but happy to be back with everybody. And hopefully you enjoyed the video today and you continue to stay tuned and we'll have more for you very shortly. Okay. Have a good one, everybody. Bye.